I want to take a minute or two to talk politics. Kind of, but not really. So now that the two parties' tickets are set, we're entering into the election season, like we need anything else for 2020. But no matter which side of the aisle you sit on politically, you're probably concerned about the potential impact the elections will have on the financial markets, which is why I want to share with you some data that will hopefully ease some of those concerns. I know you've already heard stories from friends, family members, political commentators about how voting for their candidate will inevitably lead to the financial markets going up, and voting for the other guy will cause the economy to melt down. Successful investors understand this, that politics matters very little to your long-term investment outcomes. You can even use the facts I'm about to share with you with friends who are convinced that a Trump re-election or that a Biden win will mean that XYZ for the economy and the stock market. And they're passionate people on both sides with, convincing arguments why Trump is better, why Biden's better. And they may find that their theory is correct in the direct aftermath of the election, depending on how the market reacts. But ultimately, what's important to the market is this and only this. Are companies, the ones that you're invested in, going to continue to sell their products and services, improve the efficiency and profitability along the way? And the answer is a resounding yes, no matter who's in charge. And this isn't my opinion, I'm just sharing with you the facts. Take a look at this chart of the stock market returns during every presidency since Hoover. You'll be hard-pressed to see any difference in market performance for each party. Going back to the late 20s, every president, with the exception of Hoover during the Great Depression, and Bush, the second Bush, whose time in office was bookended by two crashes, the dot-com crash and the financial crisis, has seen the market move higher under their watch. Here's a graph that shows the cumulative performance of the markets through successive presidential terms. Again, it's hard to find any pattern that shows a difference in returns between the two parties. And then every 2 to 4 years, we also hear investors concerned about who controls Congress. But as you can see with this graph, the market has risen under a divided Congress, one that's held just by Republicans, as well as one that's controlled by Democrats. And in fact, we've experienced all three in the last decade, and the market has continued to march higher. Additionally, remember how many people were convinced that an Obama presidency would tank the market or that a Trump presidency would do the same? Neither occurred, and in fact, the opposite did. So, no matter which side of the aisle you're on, you probably feel strongly that the person or the party you vote for will have a positive impact on the country, the economy, the stock market, and your personal finances. And you also probably feel strongly that if the opponent wins, the opposite will occur. But a simple look at history shows that the market simply does not care which political party is in power. My hope is that you remember this, especially when the other team wins.